Please welcome Joanna Shields.
Thank you, Fiona. I spent 26 years in tech, and I spent time in building some of the great giants that you've all heard of, Real Networks, Google, Facebook most recently. I started a few businesses myself, but when I got the call to join in this, this mission to make Britain a technological powerhouse, I couldn't resist the chance, because I'd been seeing as an entrepreneur, as an investor, and as a business person, what had been happening in East London, and it was a profound change, not just in terms of, the gentrification of a very, challenged area of the city, which has been extraordinary, but also, looking at the number of startups that could gather at when Facebook rang and said, we want to come and have a developer event, we would have hundreds of developers show up with these keen ideas, and then suddenly the government started opening up things like Open Data Institute and making data and information available, which is becoming a big growth sector for us in Tech City and beyond. And I couldn't resist, because there is truly something special happening in Britain. So what we've assembled this afternoon is a panel of experts that I'd love to introduce to you. And then we get to be the optimistic panel that talks about how funding innovation and growth is really the bright spot. And there's a lot of positive things to talk about. So first, I'd like to introduce you to Klein from Index Ventures. He's also the founding partner of the Accelerator Group with his son Saul. And they've invested in 60 companies, many of which you know have been really big, successful exits. And he's a passionate supporter of the startup community with Seed Camp, something that they founded that operates out of East London, but also countries all around the world, to tap into that talent of innovation. And Robin's here to talk to us today and give us his perspective. Next to him, you have Xavier Rolet, who's the chief executive of the London Stock Exchange. I've had, in my first 5 months in this role, the opportunity to work really closely with Xavier and his team on launching the high growth segment, which happened on March 28th. And it's this new on-ramp or route to market for high growth companies. So his team have been instrumental in creating this, and we're working really closely with him. So it'll be interesting to hear his perspective. Simon Patterson is a he is a managing partner at Silver Lake Investments, and Silver Lake, what you may not realize, is the largest technology investment fund in the world. They have 23 billion under management. They've just raised a new fund of 10 billion, so that's going to be an interesting perspective from Simon. And then finally we have Nick Beighton, who is the CFO of ASOS, which is one of our big success stories in the UK. It's the #1 or the largest trading company on AIM, is that correct? And also just an incredibly innovative retailer. So, he's going to be able to give us perspectives on how innovation drives the development of his business. So really looking forward to that. I guess I have to do my job as a business ambassador first, though, and give you a few stats and figures. As the Prime Minister said, a download on what's happening here in the UK, and I'll be really brief. First, technology stands out as a bright spot in our economy. The internet economy grew 11% last year, and it's predicted to grow at 11% until 2016. That's significant because of all the G20 countries, it's the highest of any. So the UK is leading on that front. The number of tech jobs in 2012 grew 22%. So 34% of those open positions are in London, 27% in Cambridge, and Brighton has 11%, and the rest are distributed around the country. So it's a very strong story. The government's been recognizing the potential and has developed innovative policies to support entrepreneurs and founders. In fact, I think as a business person, I have to say that our package of measures for entrepreneurs and startups is the best in the world. From startup loans to entrepreneur visas, reduced capital gains on equity, zero tax on profits up to 10 million. If you develop your intellectual property here, just fantastic setup for a business, and something that the world just has to know. 18,500 companies have benefited from our enterprise investment scheme, raising 8.6 billion in funds, which is extraordinary. And last April, we launched the Seed Enterprise Investment Scheme to help early stage companies, and that gives investors 50% tax relief up to £100,000. So we have a record number of entrepreneurs in the UK, half a million last year alone, up 9% year on year. So in general, we have a fantastic story. But the one thing that is still eluding us is that big winner, you know, the Facebook or the Google. And Nesta came out with some research that says just 6% of our companies represent 54% of the growth in the high-skilled jobs. So our focus, you know, today is going to be a lot about how we get those high-growth companies to list on our markets, to make their home here for tax purposes, to become long-term contributors to the economy. So with that, I'm going to ask the first question of Xavier, and this is his chance to set the record straight and correct a myth that many people have about listing on the London Stock Exchange. So there's this prevailing attitude that listing on NASDAQ results in higher multiples in the long term and higher listings than the London Stock Exchange. So I'm going to ask Xavier to dispel this myth once and for all.
Well, thank you, Joanna. I couldn't have done better, even if I had been prompted, or I'd prompted myself. But there are two simple statistics in that respect, and I know a lot of commentators keep harping on the fact that you get a better multiple if you list in the United States, if you're a technology company. In the last 8 years, if you look at the relative performance of the FTSE 350 tech index right here in the UK versus the NASDAQ composite, the FTSE has outperformed it. And even over the last 12 months, so closer to home, the average PE of tech companies in the NASDAQ 100 at 18 is less than the same FTSE technology index. So this gives me an opportunity to debunk that myth that if you're a tech company, you're just simply going to get a better multiple, i.e. that the value of the growth you're creating gets more recognition in the United States than here. There is, however, one issue. And the UK has an amazing track record in terms of fostering innovation and promoting entrepreneurship. There are 23 million SMEs in the EU. By the way, about the same number of unemployed people, so that's pretty simple math here in terms of how you're going to create growth, if you think growth is underpinned by job creation. But there's another, and the UK with 4.5 million has almost 25% of them. So it's clearly outperforming the rest of its European neighbors. And I want very briefly, and I apologize for rambling on, to commend here and bring to your attention the really strong actions that this government, the UK government, has taken in the last few months to foster and help those SMEs, whether it's fiscal measures, whether it's practical measures like EIS, CDIS, consultation towards inclusion of AIM stocks in ASOS, repeal of the stamp duty that for AIM stocks that we've had since, I believe, 1694, owing to the desire of William III to finance yet another war against the French. So there is a little bit of background there, and we're hoping to make a modest contribution towards better relationship between nations. But if you look at all of this together and measures they've taken, and Tech City and the support be given to Joanna, and there are some very exciting measures and new initiatives taken in that space, as well as the support on the regulatory side to create the high growth segment. There is resolute action taken today to finance, to help reduce the obstacle to access to finance, and to help from a regulatory standpoint access to a public market. The frightening statistics is this one. And this is where Europe as a whole still has a lot of room to catch up. If you look today at the largest, on the global scene, 500 startups, the most successful 500 startups created going back to 1975. Only one company is based in the European Union. 26 alone in California. The UK and Europe, but the UK in particular, have that tremendously successful track record in promoting innovation, in using the excellence of the educational system, particularly the university system, to create this whole class of companies in innovative sectors, the three high techs, biotechs, green techs. But where we have not supported them enough is creating a financial escalator, an elevator if you want, that help grow these companies from startup to stardom so that we can retain these companies in a very, very successful, globally competitive shape. And this is where I think the measures that have been taken recently, both of a fiscal, regulatory nature, the initiatives like Tech City, are going to make a huge difference to help convert that entrepreneurial zeal, the attractiveness of the country in terms, as we've heard in a previous panel, in terms of attracting entrepreneurs, in fact, from all over the world and promoting innovation, converting that into massive value creation that is going to then help fund all the savings gaps. And I could talk for hours about the need to recalibrate the imbalance in the fiscal system in favor of debt versus equities. We've heard from the previous panel how, surprise, surprise, investors were disincentivized, actually even ordered out of equities as an asset class. And guess what? We're ordered in government bonds, which I know is a pressing need, particularly in the Eurozone. So my explanation would be it's not just sort of bureaucratic oversight, but there is clearly a clear trend and desire and need to finance the public balance sheet in a fashion that it competes with private funding, and particularly risk funding. And all these issues in the UK are being debated. And I think the very good news, the things we're going to hear from this panel and the initiatives and the successful initiatives that Joanna has led with Tech City, is that the government is listening, they are taking action, and I think that will pay off handsomely over the years.
So keeping those high-growth businesses in the UK, after we invest in them and spend all this energy and effort getting them to that stage, is an absolute critical priority. So Robin, you and your partners invest in some of the category sort of defining and innovative companies in the UK landscape, but also in the European and international landscape. Based on your portfolio and the pipeline you see at Seed Camp, is Europe poised to deliver a new class of innovators and winners?
Are we poised to?
Yes.
Absolutely, and I think you'd expect me to say that. But we fundamentally believe that there is a structural change taking place in the real economy, which I think is exemplified by the internet economy. BCG did a study a little while ago where they estimated that 8.3% of the UK economy is attributable to the internet economy. What's more, they predict by 2016 that will grow to 12%. And if we think about the number of people connected to the web and how many more have been connected to the web through smartphones over the last few years, we are talking about a population of 3 billion. So the opportunities are huge. And what we've seen is a massive shift over the last 10 years. I've lived in this country for 37 years, and I've seen a sea change in the attitude to enterprise in this country. We've seen a massive shift and a very vibrant startup scene. We've seen Europeans coming here, starting their businesses here from Eastern Europe, Western Europe, and the US. The frustration for us has been that the investment community as a whole seems to be missing out on these opportunities. And it seemed to us that those of us in it could find it very frustrating that what tends to happen is that our great entrepreneurs sell out their companies too early, generally to a US corporate. And the question we've often asked, and we've, as you said, we've backed a lot of entrepreneurs, is this cultural, or is there a lack of opportunity to remain independent? Which is why we're so much in favor of what LSE and the government are doing. Because we know we've got some of the greatest investors in the world, probably in this room. But do they know enough about tech? No, they don't. And so we understand that this is a process, but this flywheel has started to move, and it is moving quickly. And we understand that the responsibilities lie across the board. It's not just with the public markets, but with VCs, with us preparing our companies to be on public stages, but for the public markets to be open to us in the way that, say, NASDAQ is.
Yeah, I think we're really fortunate that we've got this high growth segment launched, and now we have this opportunity to speak to all of you and to let the world know that this segment is available and that there is an opportunity to take your business from startup all the way to a publicly traded entity here in the UK. I think right now we have a lot of misinformation out there, which is why I thought it was really important to let Xavier explain that it's not true in terms of valuations, comparing the London Stock Exchange with NASDAQ. And we really have to, we rely on all of you to get that word out and to help educate the world that this is the best place to imagine, start, and grow a business. And one of the things that we're doing, we announced something called Future 50, where we're looking for the top 50 companies that are on the verge of making it big. They're scaling quickly and they're getting to that stage where they're considering their options, whether it's an exit like an acquisition or whether it's a long-term play with an IPO. Simon, there's a lot of companies out there that you're working with that you've seen recently how quickly they're scaling and how quickly they go from startup to this point where they are a potential candidate. What impact is this, scaling quickly and this reducing the cost of innovation having on the startups that you're working with?
Well, I think there's real cause for optimism looking at what's happening in Europe and particularly in London today, because the cost of innovation has come down so much and because of all of the initiatives that have been put in place over the last few years. We're seeing a tremendous wave of company formation. We invest in later stage, larger chunks of capital as compared with Robin's firm and his partners. And so, we're a little bit further up the chain, but we can see this coming. And if you look across all of the sectors, if you look across healthcare, if you look across financial services, retail, media, you can see some really interesting, innovative companies. It's just going to take a little bit of time for those to get to the scale that we're talking about here. From our standpoint, as we're looking at investing in these companies, if I think about the next stage of growth, what's the constraint there? It's really around talent. And this is something that there's been quite a lot of talk about today and other policy initiatives focused on this. There's a lack of talent to grow these businesses up to super large scale. We don't have enough engineers. We don't have enough product people, who understand the intersection between commercial and engineering. And we don't have enough senior managers who are able to manage a company through this super fast growth phase. In addition to that, if you think about that as the top of the skills pyramid, we don't have enough of the broader-based skills within technology as well. And so it's up and down that there needs to be work. So I think in terms of where to focus next to invigorate this and to create the Facebook or the Google of Europe, I would say that would be the area that we collectively need to address.
So a lot of the startups that I remember used to pitch us at Facebook, Nick, would say, we want to be the next ASOS. So you were the model for them. As one of the world's most innovative retailers, how do you maintain this innovation? Technology is obviously part of your innovation strategy from day one. How do you maintain, that innovation that keeps you ahead?
Well, one of our biggest barriers to future growth is maintaining the startup spirit that the founder Nick Robertson created. And while he infuses all of us in words like restless innovation, put yourself in the customer's eyes, the management team consider our business model work in progress. We never think it's finished. And whenever you have that it's never finished approach, you're always looking to fix it. We don't necessarily consider ourselves a pure tech business either. We consider ourselves a fusion of media, editorial content, reinforcing women's choices about what they should wear, how they should look, how they should do their nails. We also have this big retail engine, and then it's all crushed together, and the intersection in the middle is the beautiful thing that has become ASOS. When this started 12 years ago, I know Nick never thought it was going to be anything like this. It's now the most visited website on the planet for 34 and below for fashion, which is some things none of us on the management team expected, but hold dear and treasure. Our growth strategy didn't start out by looking at major land masses and thinking that's where we'll go and sell some dresses next. Our first international expansion was in Australia, and that was about 4 years ago. Now we have people in Australia buying something off our site every 6 seconds. And one of the beauties with the technology is you can follow demand quite nicely. So you don't have to build significant infrastructure in any far-flung places. You look at where the demand's coming by the website. You then invest through that demand and help the customers find your site better, give them a better experience. So that's one of the beauties of tech. But I just want to pick up a couple of things that Robin said earlier. The space has really changed. Social media has been an enormous benefit to ASOS. It's created the virtual fitting room experience where people can click something off the site, share it with their friends, and instantaneously get reinforcement of what's good. Mobile is absolutely enormous. We're in the mobile decade now. Technology's gone in 10-year cycles. So you've got to absolutely be on mobile. We have to be agnostic with our technology, agnostic with our channel. We know our customers will start the morning on their laptop over breakfast, looking for media, looking at the news, looking at our website. They may then carry on the mobile on the way to work. They may flick around at the laptop at work if the boss is not looking. And then when they get home, they get the laptop out again. So that's kind of saying the 20-something guys and girls, they just want access to your products. Something that's been very fortunate about London is because it's multicultural, we found it really easy to get Russian, Chinese, French, German guys and talent to come and help us form our international strategies. The thing that we are lacking at the moment, and Simon picked this one up, is someone to build our technology assets. London itself is becoming quite tricky to get .NET developers. That's something we need need more of, and I welcome your strategies on that. I think there's also an uncomfortable relationship that we haven't yet formed in the UK. We haven't quite yet got the Silicon Valley culture that the Americans love. And I can see that in my investment, in my shareholder base. 5 years ago, it was all European investors, London investors, and we seemed brilliant at startup capital and in engaging entrepreneurs. Then when the PE got too high, it kind of dropped a little bit, and then we now have about 30% of our register which is American. So it's very odd. So it seems somewhere in the middle, the European and the London investment community fall out of love with the tech community. I don't know why that is. So I don't know, that's something we can probably pick up later.
What's interesting about what you say is the Prime Minister mentioned this morning about the strengths that we have and putting those strengths forward in a global market. One of our strengths is the fact that, as Nick described, his company was global and international from day one. Because in order to be successful here, you have to think globally, you have to think internationally, whereas the counterparts in the U.S. have the luxury of a large domestic market, so they don't always innovate first in terms of that. So I think that is one of our core strengths, and as this next decade evolves, we'll see that being global from day one and looking at international markets as a core strategy of your business from day one is really important. I think, Simon, we talked about this yesterday. You had some examples in this area.
That's an important point. There's a reason why we haven't had these very large companies coming out of Europe as compared with the US. They have the advantage of a very large domestic market, and so they can scale there with lower risk as compared with companies scaling in Europe. But what's happened now is that with these global platforms, the market's global. You're not, from day one, you're creating a global business. You see these companies going live. They're going live in Sao Paulo. They're going live in China. They're going live in Europe. They're going live in the US all at once. And one of the advantages that we have here is because we are international, we have talent here that's international. We have the capabilities to do that, perhaps in a way, actually, they don't have in Silicon Valley. That's a competitive advantage, if you like, for us going forward. The bit that we have not yet quite got is the density around this community that they have in Silicon Valley, having spent time in both places. I was involved in forming a software company back in the late 90s And when we did that, we were the only company there. You know, there was literally no one around, and it was a very lonely experience. Today, if you go down to East London, your part of town, and you go to a pub there, it's full of young people who are all working on startups or growth companies, and they're talking about what they're doing, and they're talking to investors. That, you know, the investors are there drinking as well, the advisors are there, and so you get this density which creates momentum, and that's the other piece. We've not quite got sufficient density yet, but you can definitely see it improving a great deal as compared with 10 years ago.
Well, I think you're right, Simon. It is a progression of the tech community here. One of the things I wanted to ask the panel about is second-time entrepreneurs tend to have bigger aspirations than first-time entrepreneurs, and they tend to be more willing to take their business all the way through an IPO versus, you know, selling, because that's the experience they've had. And we're starting to see a lot of entrepreneurs who were part of other startups now beginning on their own and starting their own businesses. So I wondered how long it will take for us to replicate that serial entrepreneur culture that the U.S. has, that, you know, is fueling this constant sort of regeneration and new business growth.
I can probably add something to that. Yeah, I think, you know, I referred earlier to excuse me, entrepreneurs' aspirations and whether they sold out too early. And, you know, one can well understand why an entrepreneur who's offered 100 million or whatever for his or her company might be tempted to take that and not have the big dream. It's true, however, that the second-time entrepreneurs who've banked a little bit of capital have a very different approach. And we've seen a lot of that in the Valley. And, of course, we're starting to see that now in London. And as very early stage investors, we do candidly favor second-time entrepreneurs for that very reason, because they seem to have set their horizons just that much further.
Yeah, looking at the credentials of some of the leaders, they've all been somewhere else before. So some of our top, you know, potential companies to list all have been somewhere else before. So I think we're starting to get there. It does take time, though. You can't replicate a culture overnight. So we're getting there. Let's see.
I mean, Joanna, my observations on that is every entrepreneur thinks he's going to go and build the next big business, but they've got to have 2 or 3 failures to hone their craft. That's my observation of working with several in my career. And once they've been through that failure is the most powerful learning experience. And then they come back with something that's much stronger. And, you know, I've certainly seen that with my current boss, and I've seen it with the previous 3 chief execs I worked with, who are all entrepreneurs. You know, that resilience and that commitment to try something different, you know, turn left when everyone else is telling you to turn right, and then preparing to take the learning experience is what seems to mark entrepreneurs out differently.
Yeah, I think culturally, the concept of failure is a little bit perceived a bit differently here. I think it's changing, but, you know, in the U.S., fast fail is a well-known sort of tech culture thing. Like, it's almost a badge of honor to say, well, I screwed up the first time. And
Which is why I think the density piece is really important, because if you're doing something like that, but you've got other people around you who think in that way and who are not necessarily in your particular field, but in other fields, thinking about taking risk, you're more inclined to do that.
Right.
I can take a terrifying concept for finance directors, but...
Go ahead,
There's a couple of additional points, I think. One is that for many entrepreneurs, your question being how long is it going to take, it's really the 4th generation in the United States, I think, the way I count, with all the reinvested profits from the previous enterprises. And that example is present now to entrepreneurs throughout the European Union and the UK. And often what is missing is that degree of extra confidence and extra ambition. But you have the example of the United States, to the point where now entrepreneurs have become successful in their own right. We see US companies coming to buy out many companies over here, hence, you know, sort of stifling sometimes the future growth prospects. But there's another element that is perhaps not so well known, is that a lot of the original pools of capital that funded innovation in the United States, whether you look at private equity, venture capital, the hedge fund industry as well, a significant portion of those capital pools came from Europe. So there is appetite for risk in Europe. Europe is not the completely risk-averse zone that is sometimes portrayed to be. And as the opportunities for growth investment here emerge and grow, I think the growth pace is likely to be a lot faster, i.e., it will be difficult to catch up with the Googles and the Facebooks in 3 years. But I think overall, the speed of innovation and the growth rate and what you're doing with Tech City and in other clusters around the UK is a tremendous encouragement. So I think a couple of generations will be sufficient in the UK, since it is particularly a more open country than perhaps some of our European neighbors.
Well, I've been in the first 5 months speaking a lot to university students and entrepreneurship clubs inside universities, and I'm finding it's a pretty robust, how many people want to start businesses. The statistic that comes to mind is in California, the top 3 universities, 20% of the graduates have already started a business before they leave school, and 40% are in a startup within 2 years of graduation. So we're starting to see that become an acceptable career path, but entrepreneurs need to become heroes, and they need to be recognized as such in society. They need to be seen that way. And what I'm finding most encouraging, though, is the young people that you talk to in the middle school, high school era. They grew up in this always-on social, digital, connected world, and in fact, most of them know more about technology than their parents. And they are thinking about entrepreneurship in a very creative way, and I think that there's a lot of promise, and we have to nurture that. And the STEM education initiatives and various other things, like letting kids sort of, free think and think about entrepreneurship as a credible path is really important. So I think we should probably take some questions from the audience, if that's all right. Can you see one? Okay, go ahead. All right.
Lawrence Garrett from Highland Capital Partners. I'm just interested, I applaud what's going on in terms of reducing the rules for the LSE listing. I think in May, so far in NASDAQ, has had about 5 companies priced to go public. London, the last public company, I think, in tech was 2010, Mail.ru. How do you increase the institutional demand for tech stocks in this country? Because the rules is one thing, but actual institutional demand for the quality of the paper and the quality of the opportunities that are out there needs stimulation.
Well, first, I'll let you guys talk about the institutional demand, but first we're on an all-out recruitment of the top companies. We have something called future50.com where companies can apply to be part of this bespoke sort of concierge service that helps them, define everything that, help them with everything they need that government can do in the process of getting them to this point. As a dual citizen, I've traveled all around the world, and I've never seen we have 94 consulates and, trade assist offices around the world. And, entrepreneurs have access to that, and that's absolutely extraordinary. One of the main questions we get is, how can you help me get some visas for these engineers that I need to hire from, wherever they are in the world? And we sort of intervene and support people on that thing. So giving companies that level of service that they need, government thinking like a business and delivering on that service is really important. And then, once we have this strong and robust pipeline, I don't think we're going to have a lot of trouble finding institutions to get interested in that, but I'll let these experts talk to you more about that.
Could I, before Xavier comments, because I think he's probably most qualified, the implication in the question was that regulation or changes to the rules by themselves is not going to do this, is not going to make this happen. And I would agree 100%. I think, looking to regulation to change the way in which institutional capital looks at these companies is a very small factor. For us, the biggest factor is exposing these companies to the institutional investors. And to that end, we are pulling together mini conferences which will bring 20 or so companies to pitch themselves to interested investors. Not with a view to listing immediately, but getting to know what's happening in this particular ecosystem.
Just add one more thing. We've made an outreach across the country, and there are 22 established clusters. There are many more, but there are 22 that are like formally established as clusters. And when we announced the high growth segment, we had 11 clusters represented with companies coming forward to bringing them from the various far-flung places all across the UK and bringing them to London to hear what the stock exchange had to say and what the Chancellor had to say. So I think we've got a robust ecosystem that's building all across the country.
Yeah, I think it's right. It's about doing a lot of things to actually reduce the barriers to access to capital. The high growth segment is a segment designed for companies that already have a proven track record, 3 years at a minimum of growth, and can access our markets without the onerous requirement of a massive free float, which is more suitable for larger companies. Again, it's about creating a financial escalator. It's not just the startup level or the initial years. It's about ensuring these companies, as ASOS, and when ASOS joined AIM, they were worth barely over 12 million pounds. Yep. Now you're almost 3 billion pounds. If my math is right, that's a 23,000% return in less than a decade. Investors always ask me, where do we find growth? Which emerging market country am I going? Which commodity should I look at? I say, look right here. But unless I misunderstood the gentleman's question, because the mic was not very powerful initially, your point was we haven't had tech IPOs since 2010. I would encourage you to look again. Last year, for example, we've done a number of tech IPOs. I'll just pick some of the winners. All of them actually are up. One Disco in July, up 390%. It's a Sheffield-based software and technology company. RetroScreen Virology, up 190%. There's many more. We do a couple of tech IPOs every week at the moment. Now, some of them are very small. The smallest this year was £1 million. Of course, that doesn't tend to attract too much attention. But if it's another ASOS, I'll take 2 of those IPOs every week of a year, and every year of the rest of my career in that industry. The technology market in the UK is vibrant, but it could be substantially more vibrant if, and as the government has supported us in that, all the stakeholders, that includes the exchange. We're an infrastructure company. Thank you, Tijan, for the pitch for infrastructure company. We help others create wealth and value. It's the investors, it's the bankers, the underwriters, the financial advisors, the PR companies, the lawyers, making the rules a little bit more streamlined, a little bit easier to comprehend, speeding access to market, reducing the imbalance in the fiscal treatment of equity. I mentioned that earlier. It's very substantial. Equity in the UK and now in the European Union is taxed at the corporate level, at the capital gains level, at the dividend level, and at the financial transaction tax level, which is a real killer of value in the investment world, as well as a significant increase in the cost of capital of companies. It's effectively a financial transaction tax is a tremendous unemployment creation engine, unfortunately. So looking at the imbalance between the fiscal treatment equities on the one side, which the government has done with EIS, CDIS, inclusion of AIM stock in ISS, which helps lower the rate of capital gains tax, repeal of the stamp duty, whereas on the other hand you have deductible debt, particularly as it applies to the financial sector, which increases the imbalance ultimately between the stock of debt and the stock of equities. All these measures taken in isolation make a contribution, but as a whole, backed by determined government will to facilitate the life of entrepreneurs, from helping them secure visas to helping them secure, the right location for their business, help with government processes, the Future 50 that Joanna is overseeing, which is a wonderful idea. It's about this combination of measures that send the message that the UK is open for business, that entrepreneurs are welcome, and that they are considered as the solution to that growth conundrum that has been evading us so far. That, I think, is the power of the message.
So we have a minute left. Any last words from the panel?
I would pick up on one thing within the high growth segment, which I think was an inspired move, which is reducing the minimum listing requirement from 25% to 10%, and it's something that three colleagues here on my right were instrumental in doing. When you're taking a company public, it can be quite a painful experience. And previously, you were forced to sell a quarter of the company. So in embarking on this journey, you were taking quite a lot of risk to do that. And in the US, you didn't have the same level of minimum requirement. So fundamentally, in that respect, it was more attractive to look at the US. By reducing it to 10%, you could now go out and do that on the UK exchange. And so it takes away that extra element of risk. So I think that if I pick one particular thing out of the measures that you outlined there, that would be the one.
I think that's a good point to close on, because what Simon's pointing to and describing here is that private sector and government are working hand in hand, and we're learning from the private sector what is needed to facilitate growth and to change direction and ensure that innovation is the change agent and that entrepreneurship is our path toward economic growth. So I think with that, I'll thank the panel for their support and their wisdom, and it's a great working with all of you guys. Thanks.